Semiconductor stock Onsemi is hitting fresh highs in 2023 with a positive reaction to its latest quarterly report. And here now to break down all the numbers is Onsemi CFO Thad Trent. Thanks so much for joining me today, Thad.
Thanks, Alyssa.
All right, so let's get your overall impression of the report. There was another strong quarter of strong double-digit top-line growth, some slight acceleration from the prior quarter as well. But what's your overall impression of the numbers?
Yeah, look, we just reported a great quarter, right? There's macro uncertainty. We're navigating through that. At the same time, we reported results for the full year. We reported revenue of $8.3 billion, grew 24% year over year. Strong operating margin as well, growing 4 times faster than revenue. And we're very confident where we are given the uncertainty in the market. We're driving growth in all of our target markets of auto and industrial, and we feel good about where we are today.
What would you say is the biggest contributing factor to the growth that you saw in the quarter and all of last year?
Yeah, so for all of last year, it was our automotive growth, right? Big growth there, big growth in industrial as well. Now in Q4, we saw industrial roll over a little bit and get soft. That was to be expected. Our consumer and compute markets, which are not a focus for us, have been soft. As we go forward and we think about Q1 and beyond into 2023, automotive is going to continue to be a driver of growth for us. It's our enabling the EVs of the future. We've got the products that are enabling the whole eco-sustainability system, and that's driving our growth going for the long term.
Let's talk a little bit more about your outlook for the first half of the year and maybe how the second half of the year is shaping up too, especially for that silicon carbide business. I mean, like you said, what Onsemi is doing is really helping to drive that EV revolution.
Yeah, so the EVs that we enable, we play in powering the traction inverter in EVs. That's through silicon carbide. We're seeing a transition moving from silicon to silicon carbide, much more efficient, more cost-effective for our customers. At the same time, we have other growth drivers in the automotive industry as well. We enable ADAS systems through our intelligent sensing. We've got a market-leading position in ADAS. So that's growing over the long term. When we think about content growth going from an internal combustion engine to an EV, the content growth for us goes from about $50 for an internal combustion engine to $750 for an EV. So that's going to drive the growth over the long term. The silicon carbide is definitely a tailwind that'll grow and outgrow that market. And we feel comfortable that we will outgrow the automotive industry over the next several years, riding this wave of EVs.
So in terms of the revenue breakdown in the different business segments, where does silicon carbide stand today and where do you see that by the end of the year?
Yeah, good question. So we just reported that we did over $200 million in 2022 in silicon carbide. Based on our projections right now, we're going to do $1 billion in 2023. So going from 200 million to $1 billion, great growth. This is supply limited. It's not demand limited. The demand from our customer is there. This is a market that is going to be supply constrained for a decade. So we've got the demand. We're stacking up the customer wins. It's a matter of execution for us.
And on the customer front, is there any detail that you can share in terms of who those customers are in the automotive space?
Yeah, so we've made some big announcements recently. We've announced a strategic partnership with Volkswagen. We've talked about we're shipping revenue to Tesla. We've got other customers like Jaguar Land Rover, NIO. There's a whole host of customers that we're actually shipping revenue to, and that's going to support that growth of $1 billion and beyond.
And how do you see that perhaps evolving over time? Do you see those same customers ordering more, or do you see more of a broadening of the customer base as the year unfolds?
Yeah, well, I just named a few customers. When we look at our customer base for silicon carbide, it's very diverse. It's diverse in a customer base and geographically as well. We're covering all the major geographics around the world. When we look forward and we see that we've got $4.5 billion of committed revenue between 2023 and 2025. Now, those customers are signing up much longer term as well as other customers. So we see this as a long-term play in terms of what our customers are doing. They're expanding their relationships with us. We're getting much more strategic with them and getting aligned on roadmaps over the long term of how we actually help enable their vehicles and make them more efficient.
And do you think, in terms of what could impact revenue, matters more between expanding out what you're doing with current and perhaps new customers, with the technology now being available in silicon carbide, or beating out other players in the space? What sort of dynamics are you seeing at play there?
Look, it's a big market. And as I said, it's going to be supply limited, right? It's a big market. We're going after it. We're winning across the board. It's more about execution on the supply side. We made an acquisition to expand our vertical integration so that we could support our customers over the long term. So we do everything from boules and substrates all the way through devices and modules. That differentiates us, and that gives our customers assurance of supply. So when they sign up for us for years, they know that we can supply that and we can support them end to end. So it's more on an execution on the supply side because the demand is there.
What would you say is the biggest risk to execution this year?
Well, look, anytime you're going to ramp at that type of magnitude, there's always execution risk. We've been putting the capital in place, the equipment in place. It's a matter of just time for us to execute on that. The demand is there. It's ours to have.
What are you most optimistic about for the rest of the year as it continues to unfold? Clearly, automotive a big area, and it sounds like there's a long runway for growth here.
Well, I think beyond silicon carbide, which is obviously a growth driver, we've got a full portfolio of product, right? Whether it's other silicon power devices, whether it's intelligent sensing. So we sell a broad portfolio to our customers, not just silicon carbide. So we're not going in and forcing a solution with our customers. If they want a silicon solution, we can provide that. If they want silicon power or silicon carbide, we can provide that as well. We also round that out with all of our intelligent sensors, which enables ADAS and autonomous driving. We don't have to get to full autonomy. We're getting that through more safety in the car every single year. So as we think about our relationships with these customers, it's becoming more and more strategic, where we're providing a large array of products, in some cases up to 500 different part numbers to those customers. So we can walk in and actually sell a full solution to those customers.
So is that then an area of leverage that you see in the future, is being able to sell the suite of offerings to customers? How much upside is there to that versus what's currently happening?
Oh, absolutely. I mean, we've been a long-term supplier of the automotive industry, so this is nothing new to us. We've had the channel, right? We've had the relationships. So whether it's LED lighting, ultrasound, intelligent sensing, we can provide that for our customers. So it's a matter of having a large portfolio that we can help enhance our customers' solutions.
All right, Thad. Well, thank you so much for breaking down the quarter and going into such detail about what is going on with the company and what the year holds. So we really appreciate it.
Thank you.
And make sure to check out investors.com for more earnings coverage. Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.